Hey traders, it's 10 to 2 here in the UK. The US is just coming into action right now. It's obviously been a quiet London session with bank holiday over here. Now, going to focus primarily on a risk off scenario. What does that mean and why are we focusing on that? Well, we're focusing on that purely because of remarks that have come out over the weekend from Mr. Trump himself regarding the trade wars with China and the 25% tariffs on all imports. So what has that done? Well, what we've seen is we've seen a huge sell-off in the Dow. It's broken through some key structure levels, but it also gives us opportunity to trade elsewhere. So when there's uncertainty in the market and traders effectively want to take their capital out of indexes or equities, that's what we call risk off. So where does the money go from risk off? From risk on to risk off? Well, it goes to safe havens, and safe havens are usually an asset that doesn't usually produce a yield or income. It just means it's a safe home for your money. Whereas if you invest in shares and stocks, equities, etc., what they'll do is they'll produce you a yield, or that could come in the form of dividends, it could come in the form of capital appreciation. But what you look for from a safe haven is something that isn't going to give you that, and it's not necessarily going to devalue over time. It's just somewhere to put your capital and it's safe. But then obviously there's the knock-on effect that the more people that move their capital to a safe haven, it creates demand, therefore the price naturally increases. So that's what we call risk on, risk off. So we've seen this huge move down on the Dow now. We've broken key level of 26,000. Where we currently sit right now after, what is it, about a 400, 500 point drop. This has made a nice return for our traders here on the Live Traders Club, but however, you guys can still profit from this kind of move. So what we're looking for, are we expecting the gap to close? Well, you know, if it is going to close, then it's got to come all the way back up here. I just see this as an opportunity now for some continuation trades. We may get a pullback up into sort of the 26,180, this previous cycle low. If it does come all the way back up to here towards the 26,300, fantastic. We'll be all over that like a rash. But your first barrier is going to be around the 26,100, this structure point here. So we'll be looking for price to rally into this area, and then we'll be looking for a break. Alternatively, as the US comes into the marketplace, where we see the huge gap down and sell off last night, you can see how the market's tested this same price point multiple times around the 25,950. It's rallied, sold off. Buyers have come back in again, but they're not as aggressive this time. We could just see a clean break of this level later on this afternoon as the US comes into play and we see full force of money flow. So how do we look for correlating opportunities? Well, that's where we're going to head over to gold. So this is the other risk off asset. So we'll be looking at the precious metals. Now, as of last week, we saw what I would say was a dollar sell-off based on the numbers that came out. Yes, employment numbers look good, but the average hourly earnings was poor. Therefore, we saw that dollar sell-off. And it was due a little bit of a correction. We came out of our long positions in gold. You can see here that we had some 4-hour positions on the break of the highs, but then we also added into that position on the Friday with the move. But we came out after the impulse, and you know, if you speak to any of our Live Traders Club members, we like to sort of exit these high impact news announcements because there's usually a correction straight after them. So we're looking now at this smaller correction here as we expect gold to continue and potentially break through 1286. If we break through 1286, we'll see 1292 tested, 1294, and then we're looking for a break of that descending trend line. If we break through that, then you know we're talking 1310 and then on towards 1350, towards 1360, the higher upper echelon of the market move around here, 1344s. So that's one other asset. The other market we can look at as a safe haven is the yen. So we're looking, you can see here we traded the yen short. It wasn't quite hitting our target last night, but you know, if anyone was awake and you see a move down like that, you just take the money, bank it, hope for the gap to close, and we'll look to trade this market once this gap closes, which it looks like it's about to do. So that's going to pay off dividends should we get some nice rejection candles through around I'd take a look at around the even handle 111, but up towards 1120, 111.20 will be where we'll be looking at further shorts. Excuse that, my phone's not on silent. Now, the traditional FX trade for risk off is Aussie yen. So this is a market that you should be looking at for opportunity. And if we go up to the higher time frame, you'll see a really nice structure level through here around the even handle of 78. So anywhere between that 77.80 and 78. You can see here you've got these wicks to watch around here, 77.60. The market's in that region now. So what I'd be doing is I'd be looking down the lower time frames, seeing if you can see some rejections. But you can see the candle closes a little bit higher. So where the gap from Friday is a little bit higher. So we've got this void to fill. So I'll just show you. This void is usually got to be filled. So what I'll be looking for is the market to push up into here and then reject. Obviously, that could just turn around and a sell stop underneath 77.25 would probably pay dividend. Looking to take your profits around 76.80 initially, and then if we break these lows, you're probably going to see the market run away a lot lower. So you can focus your attention on a lot of yen pairs, precious metals, and then obviously look at those indexes to continue to decline. Okay guys, that's it. It's a short, sweet video here from Bank Holiday Monday in London. My name's Mark Owen from Trade and Train. If you did like the analysis and the explanation of risk on, risk off, please let me know by commenting below. If you've got any questions, you can fire those into mark@tradeandtrain.com. We also have free analysis daily sent out on Telegram. If you'd like to register for that, it is free. I'll put the link for the Telegram channel in the comment section below. Please hit like and share with any other fellow traders. Okay, if you're in the UK, enjoy the bank holiday. If not, guys, keep cracking on with the trading throughout the US session. I'm about to go and enjoy my afternoon. Bye bye.